to face it. And over those 15 months, I'd applied to more than 1,300 jobs. So to face rejections more than 1,300 times and still keep on going. So never give up, because you never know when you're going to hit it big. Just keep on going.
Pleasure to have Gautam Baid with us and to have a conversation. I'll tell you very quickly as to how we interacted for the first time. So it was one of my students, Mayank, who met you, and through that we got connected, and then through my brother-in-law, and then I was reading his book, Joys of Compounding. And in fact, I've kept this over here. It's kind of become a little old because I've been reading it and marking and everything. A lot of things talking about moat and investments and a lot of markings put together. The idea was that since Gautam is also a fellow charter holder with the CFA Institute, and the application of the knowledge as to how we apply or what are the issues to look at, let's say the growth formula, I was going through that chapter and revising that actually. So it's very interesting when we're looking at the application part of it. And then with the next book also, I'm in the middle of it actually, The Making of a Value Investor. And particularly since it's more about how to maneuver through the bear markets. And I was just going through it, and we're always talking about when is going to be the next correction. And it was very exciting to go through this entire space. So welcoming Gautam Baid, the managing partner at Stella Wealth Partners, and he's based out in the US, Delaware, and investing in India. So the investment thesis is based out of Indian stocks, and he's investing catering to the NRIs, etc. Globally, and investing in the Indian markets. So I just want you to give that story to my students as well.
So I was born and brought up in the city of Joy, Kolkata. I'm the youngest of the 4 siblings in my family, and we come from a Marwadi background. And as you know, Marwadis have got business in our genes. So ever since my teenage years, I was always very fascinated by the concept of business and entrepreneurship, especially by the fact that once a solid foundation is established for a business, the owners do not work for money, rather money works for them. I studied in college also from Calcutta. I did a BCom honors with a specialization in accountancy. So pursuing higher studies in the field of finance seemed like a natural extension. So I did my Indian CFA first, cleared all the 9 levels. Then I applied for the CAT entrance exam for my MBA. I got a placement into Nirma University, Ahmedabad, where I did my MBA in finance for 2 years. Alongside that, I also completed my international CFA, all the 3 levels. After my MBA, I got a campus placement with Citibank in their Mumbai office as an investment banking analyst, where I worked for 3 years. And after that, I moved to Deutsche Bank as a senior analyst in their investment banking team, where I worked for 4 years in their Mumbai, London, and Hong Kong offices. Now, during these 7 years, basically what happened was, I'd also gotten my entry into the stock market, like most newcomers do, towards the fag end of a raging multi-year bull market. In my case, it was the 2003 to 2007 bull market in India. I remember I purchased a mutual fund called Reliance Power Sector Mutual Fund in December 2007 and a stock named Ispat Steel in January 2008 because power and steel were the hot and fancied sectors of the time. So without paying any heed to the valuations, underlying business models or future prospects of these investments, I just got swayed by recency and vividness biases, and I eventually paid the price. Both these investments crashed 70 to 80% over the next 12 to 18 months. And I successfully gained my entry into the stock market by paying my tuition fees. Despite this initial setback, my enthusiasm and interest in the Indian stock markets remained very high throughout the first 7 years of my investment banking career. And one fine day I came to the realization that we just have this one life to live our dreams. And I did not want to spend any more of my time doing something that I was not truly passionate about. I was so keen for a career shift that I quit my job in Deutsche Bank and I shifted to the US in May 2015 without any job in hand. So my relative sponsored my green card in the US, and I used to be of the opinion that because I'm a CFA charter holder, I should be able to get a stock market job at least at an entry level pretty easily. But as you know, life is not a bed of roses for those trying to carve their own destiny. I got rejected in my first 3 stock market job interviews in the first 6 months of coming to the US. But I did not give up because I was very firm and adamant that I'm not going to go back to that previous field of work of investment banking, where the presence of perverse incentives led to incentive cost bias and did not suit my personal nature. So at the same time, the money which I brought from India that was about to get completely exhausted, and to take care of my living expenses in the US, I did not want to sell even a single stock from my portfolio in India because I did not want to interrupt the process of compounding. So to take care of my living expenses in the US, I took up a minimum wage job as a front desk hotel clerk at a hotel in San Francisco, where I used to work during the graveyard shift. Now, for those of you who do not know what a graveyard shift is, this is the shift which runs from 11 p.m. at night to 7 a.m. in the morning. I used to change basically two buses to get to work and then change two buses to get back to home. And I used to stay as a PG, as a paying guest during those days. I remember those days very clearly. But during those 15 months, what happened was that for the first time since the beginning of my professional career, I finally got time for myself to read and learn because the pace of work at the hotel from late night to early morning was pretty slow. And I made full use of the free time at my disposal to read every single blog article published on blogs like Safal Niveshak, Janav WordPress, Faddu Professor, Microcap Club, Basic Investing, etc. And the passionate pursuit of lifelong learning had finally begun. Now, here I would like to share with you the importance and the significance of passion. Very, very important. I remember every night at the hotel during those 15 months, I used to fill up at least 3 job applications online. And as you very well know, as any new job market applicant will know, that when you take all the time to fill out the form, attach your resume, and click the submit button, there is so much hope attached behind every single
Yes.
application. To face it, and over those 15 months, I'd applied to more than 1,300 jobs. To face rejections more than 1,300 times and still keep on going is only possible if you're very passionate and dedicated about what you want to do in life. If you have clarity of thought, regarding your purpose, what you want to do. And this is the stage in my life when I realized the importance of luck, chance, serendipity, and randomness as well. So during November 2016, during the course of my routine online job search, I just randomly clicked on the quick apply button on a job application on LinkedIn. And wonder of wonders, I was shortlisted for the interview, and that too for a senior role in an investment firm, even though I had zero formal stock market experience in a job. And this was the phase in my life when I got to learn the power of compounding knowledge in action. You see, all those hundreds of hours spent over the previous 15 months reading those blog articles and various white papers on investing had now built a very strong intellectual foundation for me in investing. And this time I was able to excel in all the 3 rounds of my stock market job interview. And I was offered the role of portfolio manager of global equity strategy with Summit Global Investments in Salt Lake City in the state of Utah in US. And it was like a dream come true for me because never had I expected that I'll land the job of a portfolio manager. I thought that I'll probably start as a junior analyst, then get promoted 3-4 years later to analyst, then take 3-4 more years to become a senior analyst, then take another 3-4 years to become a assistant portfolio manager, and then finally get to the title of portfolio manager. But this is why I always say that compounding bestows its magic upon you only after testing your patience and conviction to the fullest. So the power of compounding is backloaded. And I always remember Thomas Edison saying in my mind that the biggest failures are those who did not realize how close they were to success before they gave up. So never give up because you never know when you're going to hit it big. Just keep on going. That is the key to compounding. This persistence, resilience, endurance. This is the key. So just keep on going, and you'll be very successful. So I worked in that job, and it was a very good, high-paying job. I was able to save a lot of money, invest that into the Indian stock market, grow it in a very healthy clip, and over the next 4.5 years, by the time I had accumulated a good amount of savings, I had the confidence to quit my job and then apply for a SEBI FPI license, Foreign Portfolio Investor license, to set up my own company, Stellar Wealth Partners India Fund in the US. So we are a SEBI registered FPI, Foreign Portfolio Investor. We opened our fund to the public in July 2022, and the fund went live on 3rd October 2022. And I think that the timing was very, very good because the best time to start a fund is actually during a bear market when you get actually cheaper starting valuations. So that has greatly helped so far. But because this fund was available only to US citizens, a lot of NRIs and Indian citizens wrote to me saying that, sir, you have opened a fund for US citizens. What about all of us? So obviously, SEBI would not allow me to be a fund manager both in India and the US at the same time. So we tied up with Complete Circle Wealth Solutions, a Delhi-based PMS house, and they already had a large cap strategy, and they have launched Stellar Wealth PMS strategy, in which I am the equity advisor to the investment committee. And clients this way get the access to the investment philosophy of Stellar Wealth Partners That particular PM is Gurmeet Chadda, the co-founder of Complete Circle. He's the fund manager. And even that PMS is, which went live 6 months ago, the response so far has been pretty heartening. And hopefully over the next few decades, we should be able to create a lot of value for our clients as well.
That's wonderful. It's always such a pleasure listening to that journey, the amount of perseverance that it requires. And when you were mentioning all the dates and the milestones, I could just feel it and understand, because I know how much you remember each of those phases and how you move forward. So it's absolutely wonderful. So, firstly, with regards to the value investing book that you recently launched, Making of a Value Investor, were you not a value investor before, or did the bear market during the 2018-2020 timeframe, particularly the COVID, bring in some change? A little context, because we talk about growth investors, value investors. Warren Buffett's are generally having that value invest, like he wants good companies, growth companies, but at a good price with a margin of safety. And also, how do you look at it, value investing?
Sure. So, to be very honest, there was before the 2018 to 2020 bear market in India. Actually, I was a very overconfident investor because during a bull market, especially like the one we had between December 2013 to December 2017, when all your stock prices are going up rapidly, you start to feel very intelligent, very smart. You start to think of yourself as a very astute investor. But this particular bear market, which lasted for 27 long months from 1st January 2018 to 24th March 2020, this was the experience which ingrained in my mind the significance of resilience and longevity, which are the key to compounding. And it actually made me realize and understand that I was doing investing the complete wrong way prior to 2018, because the biggest lessons of investing are always learned and realized during a bear market, and they bear fruits for an entire lifetime. So I've just tried to assimilate all my learnings and observations from that particular period into this book in a journal format and shared it for the benefit of all my readers. So this book basically covers the journey of my evolution as an investor during a bear market and my reflections and learnings along the way. That's where the title comes from.
Yeah, I noticed it's actually in a journal format where it's kind of dated throughout, and the journey throughout how the markets have been during that phase. I'm not sure if I should be asking this question, but do you feel that a bear market is coming up soon, since it's been a euphoria in the markets post-COVID 2020, I would say around May or June or so. And it's just that everybody talks about a correction or is waiting desperately for a correction, and there is no correction in the market.
Well, public memory is very short. People forget that from 1st January 2018 till 31st March 2023, for 5 years and 3 months, the small cap index basically gave negative returns. It was slightly below zero. So we can withstand more than a 5-year long bear market in small caps, but once the small caps start moving up for a period of 10 months, then we start calling the top. Bull markets do not come to an end just because the public participants or the people who are out of the market wanted to fall. That's not how bull markets typically end. Bull market will end when the last bear has given up, and basically when, like we say in conventional stock market parlance, when you are panwala starts giving you tips, or there is widespread euphoria among everyone. I think that is when the bull market will come to an end. In the making of a value investor, I've actually talked about the ingredients for a bear market to begin after a bull market. So for a bear market to begin, you have to have very high valuations on inflated earnings, peak margins, and tightening liquidity from very loose levels. And right now we are on the verge of an interest rate cutting cycle. So liquidity is about to get loosened. It's not about to get tightened further. Right. So I think that's why this particular bull market has got much more legs. And the ingredients for a multi-year bull market are basically two things: revival of the capex cycle and revival of banking system credit. And both these twin engines are now firing in the Indian economy after a gap of more than 15 years. The banking system balance sheet has been cleaned up, and corporate India, because their capacity utilization is now pretty high, and because of the PLI boost, now they are finally undertaking capex as well. So these twin engines will ensure that this is a sustainable multi-year bull market. However, we should understand that all bull markets go through 3 stages. In stage 1, stocks across the board get revalued back to fair valuation after a bear market. And in stage 2, It's a very narrow and selective rally in which stocks with good fundamentals, good earnings visibility tend to do very, very well. And it's in the final stage, stage 3, that junk stocks go parabolic while quality stocks underperform. Right now, quality growth stocks are not underperforming. But in stage 3, you'll see all the negative operating cash flow stocks, all the highly indebted companies, bad quality promoters, those as a group go vertical. So we are, I think, quite a long way away from that particular stage. However, now that we are about to enter stage 2 of this bull market, I think it's time to be very selective. And I think bottom up stock picking will now be much more relevant than last year.
It makes sense, and particularly one indicator that you mentioned with the panwala starting to give tips. I think everybody is giving tips around me, at least from what I see. So that actually started scaring me a little bit in terms of market. It's quite difficult to time the market exactly, and I've seen people trying to desperately exactly quit the market at the peak and exactly enter at the bottom, which is not possible. We have to be somewhere around the curve over here and somewhere exit the market, enter the market somewhere down, at a lower price point and all. So when we're talking about the Indian markets and all, just to clarify, there is absolutely no marketing tips, stock market tips, or anything that we're doing. It's purely educational, where we want to learn and where we want to see how investment works, how value investment works, and how we analyze stocks, how we analyze industries, how we make a career in the finance space. That's exactly what we are looking at. Any specific sectors or industries in the Indian market that you're finding very promising in the long term? For example, with the Jal Jeevan scheme of the government, there is a lot of traction in terms of the pipeline, etc., related stocks. There's a lot of scope or a lot of discussions around the defense sector stocks because there's a lot of spending going on. Solar investments as well, that has been announced with the program by the government. So are we looking at it from a public policy point of view? Are we looking at it from a thematic point of view in terms of renewables and all? Or how do we analyze the sectors or figure out the specific sectors to look at?
Right. So for a successful long-term investment, you have to basically look for long-term structural trends. And long-term structural trends are found in industries with a very favorable structure. They're organized like a monopoly or a duopoly or an oligopoly at best, and they're experiencing some form of an industry tailwind. They have a long runway for growth, so you have visibility for many years ahead, and they are also characterized by value migration. So in India, over the last 30 years, we've had value migration from offline to online, public sector to private sector, unorganized to organized. And today, in the Indian market, there are multiple structural growth plays which are available, namely various subsegments within contract manufacturing like EMS, electronic manufacturing services, CDMO, contract development and manufacturing organizations, CRAMS, contract research and manufacturing services, because low cost manufacturing is in India's DNA. Along with that, specialty chemicals with critical application, financialization of savings, branded discretionary consumption, renewable energy, like you mentioned, multiple areas of long-term growth are there in the Indian market. The challenge, though, when investing in India in these kind of themes is because of the efficiency of the markets, these stocks tend to get revalued to fair valuation and then to expensive and then to very expensive very, very quickly. So that's why you have to be in this business 24/7, because now it is more about speed, how quickly you can analyze the information and act upon it, because otherwise in the Indian markets, which are hyper efficient, by the time you finish your research, the stock is already at a very high valuation multiple. So you have to be very quick and necessary. You have to hire a team, and if you cannot do it yourself in a timely manner, but speed is now becoming of essence, especially in bull markets, because in a bear market, no one is interested in equity research or stock picking. Everyone is despondent. There is no interest in stock as such. But in a bull market frenzy, and there is so much competition all around, you really have to be on the top of your game.
No, absolutely true. And particularly when you talked about the 24/7 part. So I always say that either you're a trader, professional trader, or you're a gambler. You cannot be a part-time investor or a part-time trader. Does not work that way. And so we've got so much of ETFs, PMS, mutual funds, so many products to offer. And I always say that, a fund manager on an average, correct me if I'm wrong, but the number of fund managers that I've talked to, they on an average, they're going through at least 4 years worth of con calls, 7 to 10 years worth of annual report. They have an understanding of the entire market structure, as you mentioned about whether it's a monopolistic kind of a market structure, oligopoly, etc. So understanding that entire industry with that depth people enter into the market and then they're taking positions in the stocks. So to very loosely look at a stock and analyze, it's not going to bear the fruits that you're looking for. You're as good as gambling, is what I say.
As a fund manager, basically what are we selling? We are selling just two things: our investment philosophy and trust. And the second part, the trust factor, that is completely driven by ethics only. So, just treat your clients as you would like to be treated, and the outcome will take care of itself.